Welcome to my monthly update on alternative asset fund administrator and auditor league tables. There are over 600 fund administrators and 500 audit firms servicing the private markets. I am George Evans from Convergence. Convergence is a data and analytics firm focused on the asset management industry globally. Note that alternative asset league tables are only available to Convergence clients. League tables can be purchased at the Convergence e-commerce site, which is convergenceinc.com, and just hit the e-commerce tab. So good day, everyone, and I want to welcome our two guests today, Jon Waterman, who's the National Asset Management Leader at RSM, and Wouter Plantenga, who's the Head of Group Client Services at the JTC Group. Jon, how are you today?
Very good, George. Thanks for having me. Really excited to be here today.
Well, listen, we're thrilled to have you. Your firm's got some real noteworthy performance in terms of the audit league tables, and we really want our viewers to hear a bit about really how you and how RSM thinks about the market. So Jon and Wouter, let me start with our first question. Like to talk about your growth model and really your focus on both organic and inorganic growth, how you think about growth and how you position the firm relative to growth.
Thanks, George. Yeah, I think when we look at it, we certainly have a great client base already that we like to make sure we're taking care of. And you've seen in the marketplace, we've seen it as well. The successful managers have grown, and they've grown incrementally with the new fund launches they've got. So first and foremost, we want to make sure we're taking care of our clients and making sure we're not only helping them what they need, but we're thinking about where they might want to go and bringing new ideas to them. So we look at it from that perspective. First and foremost, we do know the marketplace is out there, and there's others that aren't being served properly, not really getting the value add that they want, the additional touch and feel that we feel we bring at RSM. So we're really excited about what we bring to the marketplace and how we kind of stay connected across the various verticals within asset management, which I'm happy to go into a little bit.
Yeah, well, let's do that. Do you mind talking a little bit about your verticals and your approach? Because I think that specialization is important.
Yeah, thank you, George. I think, when we look at our client base, we serve up and down the spectrum within asset management. I would say our biggest client base is private equity funds. And we've had a really focused, probably the last, 10, 12 years have truly been focused on private equity and how we not only serve the funds, but the portfolio companies that those private equity funds invest in, and make sure that we're, helping them along their journey from one fund. If they're successful, they raise another fund and kind of grow up from that standpoint. So I'd say first and foremost, we're really leading with our private equity practice, but that doesn't mean we're not serving other verticals as well. Hedge, real estate, debt. There's been a lot of focus on those, and depending on where they're at in their cycle, we certainly have seen some growth in some sectors, some others that have kind of fallen back based on the market trends and where they're at. But we've got expertise across the spectrum that can help our clients up and down and make sure we stay in front of what they're dealing with, and obviously regulatory changes, market condition changes, and again, kind of going back to being a good steward with them and helping them grow and be a partner with them.
Yeah, no, that's great because, obviously we know the type of growth we've seen on the closed-end front is fairly substantial, and not all firms can kind of do that work at both a fund level and a portfolio company level. So no, that's terrific, and thank you for that. Let me go to our second question, Jon Wouter. I'd like to talk about the competition, and obviously, I want you to be as tactful as you need to be about that. But I'm curious, less about the names, but more about some of the weaknesses you see in the market and the types of things that RSM, Jon, can kind of exploit out there a little bit. And then conversely, without giving away your secret sauce and your multi-year strategy. Conversely, what are some of the hurdles you see, that you need as a firm, to address in the market?
Thanks, George. Yeah, firstly, we know it's a competitive landscape, and we know we're not the only provider out there. I think our firm's been in existence close to 100 years. And I mentioned it earlier, really kind of being a partner with our clients, and not only helping them with the compliance side of things, but really the value add. How can we be a trusted business advisor to our clients? And that might mean, not only the compliance things, but hey, this is what we're seeing in the marketplace. How can we bring, some things to the table that they may not be seeing or they may not have experienced yet in their life cycle? And so we try and stay in front of that. And it's really, I'm not going to, I think it's getting down to being just a good partner with them, and say, hey, we're going to do this, and this is how we're going to back it up, and follow through on that, and then bring those ideas to our clients. We've seen the competition at times struggle with that. We've seen them, if it's the big four, perhaps they sometimes like the middle market, and sometimes they don't. They get a little too stretched, and they kind of go up market and stay focused on their true strategic clients. That we see opportunity from time to time to make sure that we're taking care of not only the middle market, but as our funds grow, our clients grow, we can be a partner with them. So, and then maybe to your last question, George, we know, the biggest thing we've got is our people and our expertise. And we've spent a lot of time on industry focus, truly understanding where our clients are and are going, and making sure that they get, they don't get those dumb questions from whether it's an auditor or tax or consultant to say, hey, we understand your business. We know where you are and where you're going. And it's important that we help them through that. And I think from time to time, the competition isn't there. The last thing I would say we continue to invest in, and no different than our competition, is technology and making efficiencies and trying to make sure that we're driving efficiencies in the process. We're not asking remedial items, as we need the procedures we need to do, and we're able to accomplish what we need, certainly in the timelines that our clients want them.
Yeah, I think what's interesting, 2 points, right, is one is just the industry expertise, right, and having those subject matter experts just makes a huge difference for both that startup and that mid-size and that large fund. And then I think also, in my opinion, where you guys sit, right, kind of number 5, right, behind the big four, you're in a very interesting place that you allude to, where you can kind of pivot up or down, right? And not everybody can do that. You're in a nice spot, I think, as a firm. So that's terrific. All right, let me move on, Jon and Wouter, to my next. Not affecting the audit world as much as the fund administration world, but just want to get a quick few thoughts from you, Jon, just on kind of the acquisition activity, whether you're seeing it in the audit, but we're certainly seeing it in the fund administration marketplace, and just kind of curious what your take and your views on that are right now.
Thanks, George, for that question. I mean, I would summarize it in one word: it's crazy. The acquisitions
Right.
on the admin side, the multiples that they're getting are certainly rich, and I think you've seen the business model itself is sustainable given the multiples that folks are paying, because that the number of self-administered funds continues to drop, and the number of admins that are involved in the space that have that expertise that you talked about earlier is important. And we're seeing advisors change to different admins from time to time, and we certainly work with a lot of them and have good relationships with them, so we kind of see it from the sidelines. But it's important, that expertise that we talked about on our side, I think they need to exhibit it too. The costs continue to be driven down, and it certainly, you spend some time getting up and running with a fund admin. It's nothing you want to change the next year or the year after. So it's an investment that a lot of funds and the advisors are making, and it's something certainly to see if it sustains. So.
Yeah, well, what's interesting, John, is, at last count, and it changes daily, right? There's about 640 or 50 fund administrators. And actually, when Convergence started close to 10 years ago, there were about 400. So
Wow.
we're seeing that consolidation very much, at the top, right? And then conversely, we see almost over 500 audit firms named in SEC filings. Now, clearly the 80/20 rule, but there's still a lot of firms out there and a lot of state and regional firms, which I'm sure you come up against pretty regularly. The one thing I've seen on the fund admin side, very quickly, is just the European administrators, really the influx coming here and the spending and really these firms looking to very quickly develop a North America footprint, and in many cases they're doing that through acquisition. So audit is happening, but it doesn't seem to get happening slowly, but doesn't seem to get the headlines, right? That the fund administration market gets these days. Okay, very good. Listen, just one or two more things I wanted to chat about with you, Jon and Wouter. So, COVID, kind of, I'm hoping it's very much all in our past, and sometimes I feel we take a step forward and two back, but I do feel like the general financial services workplace is getting back to somewhat of a normal view of the work environment. Interested, Jon, in how your firm is getting back to normal and how you guys are thinking right now about the pandemic.
Yeah, thanks, George. I think it's something we've all had to deal with the last, call it 18 months, right? And how we navigate the existing landscape. And I think it's going to change business, how business is done, how we work, how we operate going forward. We're already starting to see that a little bit. I've got a client meeting that popped up for next week in New York. I'm based in Chicago. Rather than traditionally, I would probably fly in for that meeting and waste a day. I'm going to dial in virtually, and I've got colleagues in New York that will be there live with the client. So I think you're already starting to see some of that and how business, really navigates and really capitalizes on technology. I think it depends, the return to normal depends on where we're at in the country. To be honest, there's certain jurisdictions, certain states where, some would say COVID hasn't even hit, right?
Right.
And then there's others where we're still kind of restricted in what we can and can't do. Myself, again, based in Chicago, we've had a mask mandate now the past month in every building in the city, in not only the city, but in the state of Illinois. And so that's kind of prevented, I think, a lot of natural meetings, both with our clients, but also with our colleagues, team members, because they have to wear a mask. They'd rather be able to do it virtually. So again, I think we're not out of the woods yet, but I think people have adjusted how they do it. I will tell you that face-to-face interaction, that camaraderie gets, whether it's with our colleagues, with our clients, with the marketplace and friends of the firm, you can't replace that virtually. And so
Right.
I think we're all looking forward to kind of turning and getting past this time frame where we can kind of get back to normal and kind of figure out what the new normal will be.
Yeah, I mean, I think that's well said. I mean, I think we think you're going to see almost a permanent hybrid model, whatever that means, right? 3 days in, 2 days remotely. People, especially in financial services, some firms really downsizing their commercial real estate footprint because they're going to move to a little different model. But I agree with you. You can't replace the face-to-face. I find as many positives as negatives sometimes, right? Like, for example, I had a meeting the other morning with a client, and someone on the phone was or on the video was New York, the other one was in London, the other one was in Luxembourg, and you wouldn't really get those three people generally in a meeting together, right? I've tried to think myself about some of the positive aspects of it, and I've always said, and this might meet with some interesting reactions in the podcast, but I don't feel Zoom fatigued. I felt fatigued when I commuted 2 hours each way to New York every day from New Jersey, right? So anyway, different ways of looking at it. All right, listen, last thing, Jon Waterman, that I really wanted to just talk to you about, and here we sit on, at the end of September, kind of 2022, right around the corner, and budget planning starting, right? People starting to put together their plans. I'm just curious, Jon, to hear from you and your outlook for you and the firm for 2022.
Thanks, George. Yeah, we're excited about 2022 and certainly the finish of 2021. The M&A activity that's going on right now, and we talked a little bit before about private equity, they're leading the charge. We've got a transaction advisory group that is going gangbusters, and we don't have enough people to service the business that is coming to us, which is a shame. There's so much activity that I don't even think it's going to be able to finish by the end of 2021. It's going to go into 2022. I think we're really optimistic about what 2022 has, given one thing, the war on talent that we and others are facing right now, and the shortage of the workforce that's out there. And so we're continuing to try to find ways to be creative, to be efficient with our work and our clients, and making sure that we're working with the right clients, the ones that are growing and the ones that have been a partners of ours and will be a partners of ours for years to come.
Yeah, I mean, listen, the war on talent is a very interesting phenomenon right now, and I'm hearing it across the board from our clients, right? And it is going to take, to your point, I think, some creativity in terms of structure and models and recruiting and talent acquisition that very different from what we saw, say, in the last even 10 years, right? Well, listen, Jon, I want to thank you very much for joining us. You've been a terrific client of Convergence. We've really enjoyed working with you and your team as you kind of continue to build a really impressive business. So thank you, and greatly appreciate you spending time with us today.
Thank you, George. We appreciate the partnership as well and look forward to continued success for both our organizations.
Terrific. So I want to welcome today Wouter Plantenga, and for those of you who know Wouter, and for those of you who don't, Wouter's the head of Group Client Services at the JTC Group, and a terrific individual and a great personality to work with, a longstanding Convergence client. And Wouter, I want to welcome you to today's podcast.
Yeah, thanks, George, and thanks for having me.
All right. Well, listen, here's what we'd like to do, Wouter. We have a few questions we'd like to talk through with you today, and just get your sense around some of these items. And I first want to start with just growth in general, right? Everyone's got different growth models. Everyone has a little different focus in the marketplace. And, just wanted you to take us through and our audience through, how you and how the firm thinks about kind of growth and particularly growth in North America.
Yeah, thanks, George, and then happy to be part of this conversation. So, so the story of growth is, for us, very much centered around, the obvious two ways of approaching that. You have the inorganic and the organic growth. And to comment on the inorganic growth, we've gone a long way. JTC has been pretty vocal about wanting to establish a platform in the US, which by virtue of an acquisition we've done about a year and a half ago to the acquisition of NES Financial, constituted for us the platform in North America. And that really comes from a position of European administrators kind of capitalizing on the opportunity in the US market around closed-ended funds, which is a market where European administrators are very familiar with in the European context, which, being said, is much more mature than the US market, where outsourcing opportunities and particularly around emerging managers and middle market managers is still very prevalent. So our strategy is really to grow that inorganic piece as much as we can. Obviously, there's a lot going on in the market, and we feel that we obviously are not the only ones. But I think from a growth perspective, that's a very important strategy for us. On the organic side, the growth comes from new clients. We tend to measure the organic growth around certain matrices, and that's all in the public market. But to center that very specifically for the US market, for us, the success of our clients is really what constitutes the organic growth piece, and whether or not that's managers in the US, excelling in their strategy, or setting up new funds, or thinking about a global strategy. That's really where we want to be in the middle, and we've seen, particularly in that dialogue with clients, the need for our services being much more prevalent, particularly now with the world coming back online after COVID. And again, the organic piece for us is really important, because that also constitutes, the ability of us to be successful in servicing our clients, and I think we've been successful in doing so. The growth in the US has been quite exponential, if you ask me, and particularly in the closed-ended space, we've been very successful.
Yeah, well, I think in a very short time, and I think back to, the NES acquisition, which seems like a long time ago. We clearly see the brand and even the market reputation that you guys have here in North America has changed substantially. Now, Wouter, as you think about the market, right, a lot of competition, right?
Right.
650 administrators in the market. Clearly, kind of the European administrators really in fifth gear, right, coming over and looking at properties and looking also at both growth and inorganic growth, organic and inorganic growth opportunities. Tell us how you think about the competition, and a little bit about not particularly who, but some of the things that you try to capitalize, some of the things you might see in the market, some of the things maybe that you can exploit, right? What are the things that make a JTC decision a good decision for an advisor?
Yeah, no, exactly. And I think to your point, there's a lot going on, particularly in the US market. And I think there's a number of ways of looking at it. But if you're looking at from our standpoint, the market is obviously consolidating, and it's a similar trend what we've seen about 5 to 10 years ago, when the corporate services market was pretty hot out there, and you see the same type of parallels now coming back in the fund administration space. I think the reason behind consolidation is everybody tries to build out skill and tries to, kind of again offer as much as they can to their clients. So that drives also the consolidation. So in terms of more global players, they will be in the market for those larger deals, whilst we as a more humble firm, if you will really focus more on the expertise, and that's also by virtue of just who we are, because you can compete, of course, with the bigger ones out there, but that doesn't necessarily will drive the right strategy ultimately. And we again take the client as the centric point for our strategy. So if our clients need more expertise in a specific area, whether it's purely fund administration or it's compliance related, or let's take an example of a recent acquisition we've done by Segway Partners, really focus on VC supports, then that is the strategy. And I think that everybody has their own unique approach to that. So I see that more as a ultimately improvement of the market, where the larger players will become larger and the more specialized firms will become more specialized. And I think we'll qualify somewhere in the middle. We've obviously not only have our fund services offering, we also have a private wealth service offering, which is pretty unique in the market, if you ask me. So for us, that strategy is to really to kind of build on top of both those elements which we represent in terms of our clients and our services, and be really more unique and differentiating.
It's interesting you say that, because our other guest, Jon, to obviously mentioned almost the same type of unique position RSM is. They kind of sit in the middle. They can kind of go up and down market. They've got some ability to flex, right? That if you're at the top, you maybe don't, and if you're kind of towards the bottom, you don't. So I think it's I think it's an interesting place to be. You touched on an acquisition, and I certainly know you guys are a public company, and there's so much that can be said and not said, but just wanted to get your views just on the consolidation, the acquisitions, and we've certainly seen them at a somewhat record pace in 2021 in the fund admin space. Wouter, any thoughts you have on that from your vantage point?
Yeah, I think again, coming back to the initial comments on how the markets behave and which type of administrators are out there to consolidate, it also tells a story, in my view, a bit about the market. The market, particularly again on the closed-ended side, but to a certain extent also the open-end side, it has become much more prevalent. Where 10 years ago or 15 years ago that wasn't really the case, that was still up and coming. Now you see that industry is really maturing, and again, that will go in many directions. So the strategy is really looking at your clients on how you can accommodate those. That's really, again, what I view should be your center strategy is, okay, what is the value adds I or we as a firm can bring to the table in terms of offering, the services which our clients needs. And with that, that comes an element of listening to our clients to really understand, what their needs are. And based on that, you can build it in on your organic growth, of course, and build that out internally. But, there's an element, of course, of strategic growth as well through M&A, which you now see happening, of course, in the market. And again, I think we take a more specialized approach in that. And that may not necessarily only be in the fund administration space. There may be strategies which are more adjacent to the market. But again, I think that, that consolidation, if you will, and the maturing of the market, ultimately the clients are the winners in this case, because they ultimately find themselves in the position of working really with an outsourced provider who can really cater to their needs.
Yeah, agreed with you. And I think your point about specialization and it goes a long way, right? I think in the early days, it used to just be scale. And now I think you're seeing adjacent services, to your point, whether it be compliance or cyber or managed IT or outsourced CFO, CCO services. We are seeing people picking up businesses that to surround that fund admin core business with, but then we're also looking at certain vehicles that within that, whether it be an SPV or cannabis or crypto, that certain administrators are really looking at how to pick up that capability through kind of the M&A activity. So I agree with you. I think that it's well said from the perspective that the client is ultimately the winner right here, and I think that the nimble will just get better, right? And I think is what we're going to see in this market.
And maybe, George, to add to that, and this is also just my observation being in the market, is that if we as administrators collectively, have also a bit of a responsibility to bear, because again, coming back to the client argument, the client perceives our markets or these certain elements of our market really as a commoditized business. And I think that to a certain extent is true if you're talking about administrative procedures and support there. But if you're really looking at it up close, the whole reason why clients are outsourcing, parts of their administrative support or compliance support is really because of the increased regulation, because of the increased complexity. So for us as administrators in the market, it's really important to kind of what I always call decommoditize the whole fund administration model, and really again focus on the expertise you bring to the table, which is much more of a value add than what it used to be, maybe where clients would think, well, fund administration is just an off-the-shelf product, rather than it now having become a very specialized, kind of service delivery.
Yeah, I mean, I think people have worked very hard in the last 2, 3, 4 years to really differentiate themselves to your point. Okay, we talked. You mentioned briefly in one of your comments COVID, and we'd all like to think we're getting past COVID and starting to move back to a more normal environment. We wanted to just get your sense how JTC is is looking at that, and how is the firm kind of getting back to kind of as normal as it can be at the at this stage of the game.
Yeah, I think again, looking at it now after, well, what is it, almost close to 2 years that we've gone into the pandemic. I think that everybody agrees that it has again demonstrated how resilient this business actually can be, because the ability for us to switch from what used to be an in-person, kind of in an office environment, towards going full on virtual, that hasn't necessarily disrupted any of our client relationships or our service delivery. So with that said, now that we're coming back, we've kind of learned, from the whole process, and we're able now to pick, almost the best of both worlds, if you will. Which means that, from a US perspective, for instance, we've made a relatively conscious decision to focus again on what the employees really felt valuable, and focus on their needs. And so our approach has been, going back to a model where we say, well, it's remote first, but to the extent that there is a need for employees to be in the office, whether or not it's working in teams, then they're free to do so. And I think this, and it's still ongoing, of course, and we're still trying to make sense out of it and getting back on track. But I think the main message for me, at least, having gone through the whole cycle of it, is that business has been able to continue as it is. And I think that's really important, because at the end of the day, that's also what clients want from us, is to provide that continuity aspect of their business. And they rely on that heavily. So I think that the operational infrastructure reliance has really demonstrated that it works. And for us now, being able to reassess that model in a positive way going forward, now that we're coming out, or at least perceived to be coming out of the pandemic, can only benefit us all.
Yeah, no, well said. I think that's really a good way to look at it. All right, well, our last comment. Here we sit on September, late September. And I know we're all starting to think about 2022 already, and budgeting and revenue planning. Just wanted to get a sense of your outlook for the firm for 2022.
Yeah, no, that's obviously a crystal ball to look into, and as history now has told us that nothing, anything can happen. But to kind of find some middle ground in that, is that just looking from a market perspective, and I'm no economist by any means, but if I logically look at the markets where managers have gone out and have done massive rounds of fundraising, I think that from an activity standpoint, that will probably dictate the particularly the M&A markets for at least the foreseeable future, because the funds and the investment have to go somewhere. So I think we're seeing had that also as a result of the uptick in our organic growth. So other than that, yeah, there's so much going on. There's ESG. I think that is a main and a very important element of focus, and will become, and is already an important focus element for managers at the moment. And because of the fact that it's not as clear yet what ESG will do, and how that will be implemented, or whether it's from a regulatory standpoint, or from an investor standpoint, or from a manager standpoint, I think that dialogue will continue and really start to shape the investment environment even more. Thirdly, I think technology is a big kind of I wouldn't say differentiator, but it is really probably a catalyst for many of us to think about, because technology has typically been lagging behind in our industry, or at least aligned technology, as I call it, because I think that everybody relies on technology but doesn't necessarily know how to fully deploy it to their clients, and where that really becomes a value add. So I think technology in itself will only increase and reshape the whole outsourcing model going forward, and only in a positive way, because so much is now about data and data aggregation, and how do you efficiently make use of what you have already been collecting in terms of data. So I think that's in itself, those three kind of elements in terms of outlook is what I would be looking at. Obviously, consolidation, I think, will continue to happen. I think that's inevitable. So you'll see probably some larger deals happening in the market, as well as, of course, everybody out there and only trying to improve their services.
Yeah. Okay. Well, listen, I want to, thank you for joining me today. And then secondly, you've been a terrific partner and client with us. And we just always want to, we never take that for granted. And I want you to know how much that's appreciated working with you to continue to build your business. So thank you, Wouter, very much for today.
Thank you, Jason. Thanks for having me. It was a pleasure.
I would like to provide some commentary on the movement we saw from August 2020 to August 2021 in the marketplace. I'd like to start with the administrators. So over this last year, advisors disclosed almost 102,000 private funds, which is a net increase of over 9,000 funds, and assets of 24.5 trillion, which is a net increase of almost 3.4 trillion, which is up about 16%. The top 25 administrators won about 45% of those new funds and won about 49% of those assets. In terms of growth and how that growth gets kind of spread across the administrator market, let me talk to you a little bit about assets. So from August 2020 to August 2021, assets in the market grew a little over 16%. The top 5 administrators grew at about 10.5%. The administrators 6 to 10 grew at about 19.6%, so a little better than the market. Administrators 11 to 25 grew at over 25%. The self-administered market grew also at about 16%, and then administrators 26 through 600 plus grew at about 25%. So what you see here is the top 5 trailing year over year asset growth, 6 to 10 outperforming slightly, and then 11 and above clearly outperforming by almost 10%. So we continue to see that same theme in the marketplace. Advisors continuing to give more new funds and more assets to administrators 26 on. On the audit front, we saw advisors disclose, again, about 102,000 private funds, which is up about 12%, and assets of over 24 trillion, which was up about 16%. The top 25 auditors won 68% of those funds and about 88% of those assets. When you think about that distribution, it's also very interesting and thematically kind of talks about the same type of thing. We're seeing market growth, as I said, about 16%. The big 4 growing at about 15%, so keeping pace with the market. 5 to 10, though, growing at 35%, which is double the market. So we are absolutely seeing a very significant amount of new assets and funds moving to 5 to 10 in this marketplace. When you get to 11 to 25 on the audit front, they're growing about 22%. So that's about 6% better than the market growth. And then all others are also growing at about the market levels, about 17%. So again, what I'd say here is big 4 keeping pace, 5 to 10 clearly outpacing, and the rest of the market kind of at the market growth rate. So it's an interesting time. I think people are looking very hard at the market and thinking hard about their choices in the market. I want to thank you for joining me today, and I want to thank our guests for a great conversation, and I will see you in October. Thank you.